Let's look at this scenario. We have an impulse leg that broke structure here, and then you are looking to looking for trades to continue this downward trend. Okay, are you going to enter here? Are you going to enter here? Or are you going to enter here? So let's see what happens. If you enter here, you have some profit in, but if you don't exit the market comes back and knock you out. Then this is second POI, also a good place for you to sell from. But what happened? The price finally break the low? No. Instead, price went higher into this area before we see the push to the downside. This, my friend, is what I call the concept of what? Premium and discount pricing. And in this video, I'm going to show you how to use this in your advantage, and then stack the odds in your favor so that you can profit from the market every single week. Hello traders, in this video you are going to learn how to use premium and discount pricing in your favor, okay? And I'm going to show you when not to use them, and it's not necessary. To know that, stick to the end, okay? And I will share that with you. In the meantime, you can like this video, share it with your fellow traders so that they can acquire knowledge that they need in order to be profitable. So without wasting time, let's have a scenario, okay? For a downtrend, for example, this is how you use the discount. Now there's a concept of buy low, sell high. This is exactly what we are looking at. We want to be buying cheap, we want to be selling at expensive price, okay? Sell at premium, buy at discount. Now if you have this break of structure here, okay, you have this leg, impulse leg here, and for example, if you have a POI here, you have another one here, you have another one here, which of these POI are you going to use to take your trade? And that's where the concept of premium pricing comes in, premium and discount pricing comes in. You identify these premium and discount zones. It's easy. Just take your Fibonacci tool from the swing high to the swing low. If you notice my Fib tool, I only have just 3 numbers: 1, 0.5, and 0. I don't need any other number, okay? Any time price is below here, below the 50, that is my discount zone. Anytime price is below, so whenever price is below the premium, the 50% level, that is the discount zone, and whenever price is above the 50%, okay, that is, I consider what? Premium. Notice I did not say the best place for you to buy is at 60 level, at 70%, or at 80. No, I don't do that. I don't put such things on my chart. I only look at its price in area of premium, okay? And if it is yes, then I will decide to take a trade. If it's no, I know what to do instead. Now, since you are looking for a downward trend, okay, the reason why you need premium and discount pricing is this. Let's assume that you are trying to take a trade from here. This will give you a very low risk to reward ratio, okay? We are going to say, look at the situation whereby everything is perfect, okay? Let's assume this is a good trade, this is a winning trade, but you are targeting this low. You can see that your risk to reward is very small, okay? Just, I think, 1%, 1.69%, okay? If you are taking trade from here, from this point of interest here, and you are targeting this low, this is 1.1 1.6, okay? Now let's assume you are taking it at this level. You are taking it at this level, the same risk. Let's assume the same risk, but the profit will be higher. There we have 3.7, okay? So this point of interest give you a higher risk reward than this one. Then the one at the extreme will give you a much more better risk to reward, okay, of what? 5.27. okay. Now Why you need to understand your premium and discount zone is to know each trade you are taking, try to maximize your win to risk to reward ratio. Okay, that's number one. Number one, maximize risk to reward ratio. Okay, you maximize your risk to reward ratio. So that means if price comes in here, it's better you just stay aside, because you want to be, remember, selling high. This price is too low for you to sell from. Buy low, sell high. Here is too low to sell. Here is on the equilibrium. It all depends on your style, what you are looking for. Okay, and here is the best place to sell from. Now if price is to move, no, now let's look at the situation whereby you are wrong. Now you are wrong in this trade. Now, aside from you placing your stop loss above here, okay, the point of invalidation is where? This is your point of invalidation, the I. Okay, now if you are taking a trade from here, the point of invalidation is too far, so this is low probability. Now in this case, you are using your premium and discount for what? For probability setup. Okay, areas of low probability, you are going to avoid those areas. Okay, pay attention please, and this is why a lot of people lose. Now if you are taking a trade there, fine, your stop loss will be above here. Okay, but the point of invalidation of this move is this point, and as you can see, the point of invalidation from your entry point to the point of invalidation is very wide. Now let's take our short position too. From here you are risking, and this is the point of invalidation, 27 pips. Okay, and your reward is very small. So this is a what? A low probability trade. And this is how I know a low probability trade. Okay, sometimes you see me say this setup is a low probability setup. Okay, this is low probability, very very low, because if you are wrong, if you are right, but sometimes price can go up in here before going to this direction. So if you are entering here, this is a bad setup for you. Okay, even if you put your stop loss here, you can get it, price move up and then comes down to your target. So why not avoid this totally? Avoid this totally. Okay, and that's how I used to eliminate trade. With premium and discount pricing, you are going to eliminate trade. Now let's look at this one now. In this case, you don't have one-to-one risk to reward. So this also is a low probability what? Trade setup. Okay, once you get a one-to-one risk to reward from the point of invalidation, then you can say, okay, this is a somewhat medium setup, because the risk to reward are the same. Okay, so but the optimal point is this point here. Okay, you are risking just a few pips to make more what? Pips. So in this case, your risk to reward is what? 2.67, which is a high probability trade what? Setup. So using premium and discount, you are going to be able to know, you'll be able to know which setup is high probability and which setup is what? Low probability, so that you avoid some unnecessary losses. Okay, when that happens, okay, you are going to avoid unnecessary losses. Avoid unnecessary losses. Okay, avoid unnecessary losses. Okay, so this is what I use premium and discount for. Okay, to maximize my risk to reward, to know my probability setup, if it is high probability setup or if it is what? A low probability what? Setup, and also to avoid unnecessary losses. You are buying low, you are selling high. Okay, so how do you get this? If you look at my settings on the fib, I think this is it here. You can see I only have just three levels on, and that's all I need. I don't need any form of 60%, or some people call it the optimal trade entry zone, the golden zone. There's nothing golden, okay, because the market do not respect the fib level, okay, it does not respect the fib level. What you are looking for is your point of interest, where supply and demand stepped in, okay. You are looking at areas where supply and demand came into the market, and you are now asking yourself, is it of high probability for me to take the trade there or yeah? So to solve that problem, you use the what premium and discount what pricing model. Okay. Another tool you can use is the GAN. Okay, is the GAN box. GAN box. Okay, you can use your GAN box as well and put up your settings at just 3 levels. 1, 2, 3. Take off every other levels. Okay. This also is used. You can use this as a point of interest to draw your point of interest, or that maybe you are entering at 50% level, it shows you the 50% level. Okay, so now let's look at the chart and see how to apply this. Now you can see this impulse leg here. Okay, we have point of interest at this level here. Okay, we have one here and we have the last one here. So to determine areas you are selling from, you discard this one. Okay, this particular one, you discard it because it has a very low probability of what winning. In this case, this is above the 50% level, so you can attempt to sell from here once you have a lower time frame confirmation. Okay, with lower time frame what confirmation. As you can see, price came into this area, okay, before going down to take this target. This is your target here. Price is not getting there. Okay, it's not all the time price will move to deeper areas of what premium. This is okay. The moment it's above 50%, you can start pulling the trigger, and maybe you wait for confirmation in your lower time frame. Okay, now in this case here, price move from here to this point, therefore we have a break. Okay, a break of structure, and before now we have point of interest here. This point of interest, you can see price blast through it. This is another one here. This drop base drop formation, price pass through it. Okay, we have this one here. Price respected a little but later bounce off before going deeper. Okay, going deeper into these areas. Now in this case, we have one here, the supply zone here, and you can see price came, in this case price went deeper, okay, before now moving down. Okay, if you know your level of your premium and discount level, you are going to avoid these first two losses. Okay, this is a loss, fine. Okay, this is a loss, you take that. Sometimes you take losses. Okay, then this is where you have made it up. When you get these two losses, your confidence as a trader will be blown away. Okay, you will not have any confidence to even take this trade because you do not understand what that concept of premium and discount. This is a discount zone. When price is here, you can anticipate what retracement, and as you can see from this level here, price broke structure. You can start looking for a way to what buy into area of what premium. Okay, I have different strategies whereby if I want to take this retracement up, I know what I will be looking for to look for this trade up until this POIs, this one here and this one here, because this is below what equilibrium. This is not good to sell. Okay, it's not a good place to sell. This is a good place to sell, and this is a point of what this area of what premium. Okay, the deeper area of premium. Yeah, it all depends on the kind of trader you are. If you are a scalper, or this is a 1 hour chart, if you are a scalper, you can see profit from here. Okay, you can see profit, but let's leave it as it is. Maybe probably you are targeting this low, you will have been stopped out. Then this is where price was respected, and then continue the move down. And secondly, This premium and discount law do not apply to all time frame. Okay, like if I see a point of interest on the monthly below the equilibrium, I'll be looking to sell. Why? Because the monthly time frame there has more money involved. Now let's go to and see. Let's go and see what we are talking about. Now looking at this, okay, looking at this move here, or probably this move that broke structure. Now this has not yet been played out, but if price gets to this place, if price gets to this place on the monthly, I'll be looking to sell, even though it's an area of discount. And the reason for this is because of what? Money. Okay, money. The money that make up this order is so huge that price is going to what? React. Okay, price will react, and that's all we need. We all need price to just react a little bit, and that is a good thing, because in the lower time frame you are going to see your setup, okay, for that selling opportunity. So you don't have to, because price is an area of this discount, and you have to wait till price gets here. Okay, not good. Okay, it's not good. You can start selling here, you can buy, look for buy. Once you get to areas of what? Supply and demand, you can decide to take that trade, because the monthly time frame, that means when you're on the higher time frame like the monthly and weekly, you don't necessarily have to wait for price to do this before you start looking for selling opportunities. Look for reaction in price from your level of supply and demand. Okay, so if you are interested, to know the direction of the market, I will see you in this video.